Right, I'm joined now by Evan Spiegel, the CEO of Snap. Evan, thanks so much for talking to us today on the heels of these results. Evan, the stock is down nearly 19%, and as Leslie just pointed out, this is the fifth quarter in the row where we've seen your earnings followed by a double-digit percentage decline. What's your message to investors?
Hi, Julia. Thanks so much for having me. And it certainly has been a challenging period of time for our business, coming after 5 years of 50% plus year-over-year revenue growth on average, the Ukraine war and rising inflation. Of course, some of the app privacy changes have had a real impact on our business. And as a result, we've really taken our business through a transition to try to reaccelerate our top line revenue growth. And we've done that by focusing in three core areas. One is on our lower funnel direct response advertising business, and we're seeing real progress there. So for example, lower funnel spend has grown year over year. We're seeing a record number of active advertisers, up 20% year over year. We've seen purchase related conversions grow 30% quarter over quarter. So really promising results there in terms of the improvements we've made to the ad platform to drive results for direct response advertisers. We've also focused on deepening engagement with our growing community, which is now 397 million daily active users. And of course, growing time spent with Spotlight, which is our short form video platform, where time spent tripled year over year. So strong improvements to the ad platform, of course, improvements to content engagement and time spent. And then lastly, we're working to diversify revenue. Snapchat Plus reached 4 million paying subscribers. That added about 4 points of year-over-year revenue growth to the business. So we're very focused on improving and accelerating top-line revenue growth, which is a really important input to long-term free cash flow generation, which is really what we're managing the business to.
But while you're focused on that revenue growth, the thing that's really seems to be concerning investors right now is the guidance to between -5% to flat growth in the third quarter. We've seen other companies such as YouTube show 4% revenue growth. And I'm curious why you're expecting this potential revenue decline in the third quarter while you have been growing your user base.
Yeah, well, as I mentioned, we've really been taking the business through a transition with a focus on lower funnel performance advertising. And, as we look at the business by region, for example, we are seeing momentum in Europe, with positive year-over-year growth. We are seeing momentum in the rest of world region, which includes APAC, where there's positive year-over-year growth. It's really the Americas where we've had a small number of large advertisers who have yet to transition to adopt some of the new tools that we're providing that are driving really strong results for advertisers. The good news is out of that small group, half of that group, that was most impacted returned to spending levels that were, the same or greater than their levels in prior quarters. So I think we are making progress there, but there is a bit of a drag in the Americas due to, a historical focus on really growing deep with a smaller set of larger customers.
But so just to dig into that potential third quarter revenue decline, which is so concerning, is this because of an overall contraction in the market, or is this more about the business transition you're making? Because theoretically, if you're growing your user base and you're growing engagement as well, you should also be seeing revenue grow along with it.
I think the challenge has been that while we've grown our user base and grown inventory, we've seen CPMs come down because we need to bring more demand onto our advertising platform. And as I mentioned, that's especially the case for the Americas region. But as it pertains to our guidance, it's actually the first time we've offered formal guidance since the beginning of last year, really since the Ukraine war. And we view that overall as a constructive sign that the business is stabilizing.
In terms of some of these other categories, I mean, you mentioned Spotlight, growing engagement. You've also been rolling out a subscription service and also this AI chatbot tool. How are those doing, and how are those impacting your top and bottom lines?
Yeah, well, as I mentioned, we're really excited about the adoption of Snapchat Plus, which now reaches 4 million subscribers and contributed to our revenue growth in the quarter. And of course, with things like My AI, now 150 million people have used My AI, sending over 10 billion messages. And My AI is a really interesting opportunity for us because our community interacts with our AI chatbot and tells it what they want and what they're interested in. And historically, as a platform, we've had to infer that interest. We've had to guess what people are interested in based on the content they're watching or the ads they engage with. But as people use My AI and tell us what they want, we can use that data in a first-party, privacy-safe way to inform our advertising platform and also make content and augmented reality more relevant for our community.
And at what point do you think that's going to be a real growth driver in terms of the top line?
That for us is really a longer term investment. Right now, as I mentioned, we see a lot of headroom in the lower funnel performance advertising business, which is where we're spending a lot of our time and where we think we can build a more resilient and diversified business over the long term. But there's no question that My AI will be able to contribute to our performance there as we integrate it into our ad stack and use those signals in our machine learning models to help better rank and optimize advertising.